Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, as you know, and today, Paul Adams. Been a while since Paul and I have had a chat, and they've come out with some interesting news about their Ashburton project over in West Australia. That's gold, ladies and gentlemen. But I also want to spend some time with Paul talking about their latest spodumene discovery, also over in WA. It's all about WA today. The ASX code is KZR, Kalamazoo Resources. Executive Director Paul Adams, great to see you, Paul. I can't say Happy New Year anymore. It's probably coming up to Happy Easter. Scary.
Yeah, it's terrible, isn't it? As you get older, it just gets quicker and quicker.
I know. That's what I'm feeling. Anyway, let's get on to what's happening here. I looked at some of the numbers. So you've come out with an updated resource for the Ashburton project, which is over there in WA. First of all, talk us through that and why you think that this is pretty important steps forward for Kalamazoo.
Yeah, look, Kerry, it's a bit of a watershed moment for Kalamazoo. Obviously, we got hold of this program back in August 2020. We got it from Northern Star. And this is really the first opportunity that we've had after a couple of seasons of drilling campaigns, step back and redo the resources ourselves and have that under our own umbrella. So as a result of the work, and it's taken quite a long time to pull together, some 4 or 5 months at least to get to this point, we've been able to verify and really importantly replicate the original Mount Olympus resource, which is just over a million ounces. But between the four deposits, we've got 1.44 million ounces at a grade of about 2.7 grams a tonne. So from our point of view, that's a pretty good result.
Paul, I'm a little bit, I just want to, because I think others would say the same thing, because we've said in the past, we've noted a number of 1.65 million ounces. You've just said 1.44 million ounces. That to me says it's going backwards.
Look, I think it's really important for everybody to understand what we've done here.
Okay.
And in the release, we itemize all those different changes and the reason why we've got a different number. Now, what I really want to stress to your viewers is that this resource is a much more robust resource. So from our point of view, we're very, very happy with the figure that we've arrived at. Importantly, 75% of the resource, which is over a million ounces, is in a single deposit. Okay. There are 3 other satellite deposits, all within 2 of each other. One of those, Zeus, has actually increased quite substantially in ounces. It's the area around Peak that, if we've lost any ounces, it's in that area. That's purely a function of the independent nature of the resource, the fact that drill density in that area is still very sparse, and from that point of view, that's actually given us a target to go and explore for in the coming year, in the coming field season. There's every opportunity that once we do drill in that area, those ounces will be replaced anyway. So from our point of view, we have been able to completely reinterpret all the geology in all the deposits, and we've been able to verify and model in much better terms the high-grade shoots, particularly within the Mount Olympus, West Olympus deposit. The result of that is that our grade in that area has gone up 24%. So from an economic point of view, that's a much better scenario. Ounces haven't gone down, tons have gone down a bit, the grade has gone up 24%. And I think that's really a key metric that we want to try and get across to our investors.
But just dig into that a bit more. That's excuse the pun, Paul. But when you say that that's key, with the why is that so important?
Well, because the old adage, Kerry, of grade is king. Yeah. And that has not gone away. So basically, if we've been able to model the high grade with more certainty, what we've been able to do is to interpret the deposit slightly differently to what it had been done before. We're very happy with the methodology that was put forward by the independent consultants, and they consulted us on that on an ongoing basis to make sure that they understood, that we understood what they were doing, and we're absolutely happy with that methodology. So that's the reason why the grade has gone up. But obviously, if you can get the same amount of gold out of a deposit for less tonnes, that's a better scenario, particularly with respect to capex and all those associated costs that result of that.
So I'm putting sort of the hat on of the investor hat, if you like, to say, all right, so where to next? I mean, we've been talking about Ashburton. You said you acquired it, it's not that long ago, August 2020.
Sure.
So you have made considerable strides, but I'm talking to you in February 2023. What are the next steps for Ashburton? Are you going to continue to increase the resource, or what's the next steps?
Yeah, look, two-pronged, really. We've been working quietly in the background on preliminary economic studies, and they will continue. I mean, obviously, last year we did our initial metallurgy with our own drilling. That needs to continue. That's a very, very important aspect of particularly Mount Olympus. We need to do more work there. But what this work has done is actually showed us other areas in and around the Mount Olympus deposit that are now in an exploration target that's actually defined by drilling. But again, because of the density of drilling, the independent consultant had the view, and quite rightly, that we didn't have the confidence at the moment to include those in resources. So we have an exploration target, a midpoint exploration target, because as you probably know, exploration targets are always defined within a range of tonnes and grade. So we have a midpoint exploration target of an additional 171,000 ounces. That will be a key focus for our work this year in drilling those areas that are in that exploration target, increasing the drill density, getting more surety on the continuity and the orientation of that mineralization, and then that can be included in the next resource update, which we hope to do at the end of this year.
Okay, so all well and good. How long do you continue to do the exploration? And I guess what I'm looking at, okay, it's a business. How much longer for exploration in that area?
The preliminary studies that we've done, which already include open pit optimizations, underground optimizations, we've already done desktop environmental studies. As you know, the metallurgy has already started. We know we can produce a nice clean gold concentrate from the ore at Mount Olympus, the mineralization at Mount Olympus, because it's not in a reserve yet. Those studies will be ongoing. We internally have already seen enough to have the confidence that we can go through to the next steps in our development program. So that will likely include finishing off a bit of a scoping study, or perhaps more likely, as we complete that drilling in those poorly drilled areas throughout this year, we may well launch into a PFS. So that is kind of where we're heading, basically, from the work that we've done up till this point and the further drilling that we'll do this coming field season, which really now is only, 3 or 4 months away.
Oh, is it? Okay, that's what I was going to ask you. Because it's a technical term, ladies and gentlemen. It's bloody hot up there at the moment, isn't it?
It is, yes. Yeah, so our sort of field season generally starts round about March. Obviously, there's a bit of planning to do. We've just received these block models from the independent consultant. We need to go through, identify the highest value drill targets that we have as a result of this work, and then put that into a budgeted drill program for this year.
How much, let's just go through, because you said right at the start there's 4 deposits up in this area. and you said 75% of the current resources in one deposit. Do you think that this area is prolific for gold and you're going to find a lot more? I'm kind of trying to get a picture of where this is potentially going. With 75% in one deposit, is that going to rebalance a bit?
I hope so. Look, to be honest, in the couple of field seasons that we have had, almost all the drilling that we've done has been proximal to the existing mineralisation, right? So we've got quite a large tenement area there. There's well over 200 square kilometres.
Right.
We've sort of concentrated our work within almost a 5 by 5 kilometre area.
Wow.
So, we've been looking at essentially 10% of the entire tenement package. I would not be surprised, and in fact, we know that there are gold prospects more distally. We just haven't really had time up until this point to really expand beyond that. So, it's a two-pronged strategy. We want to continue with the exploration. We've got, a potentially a development project here already at Mount Olympus. We need to push that forward along that development path and see where we get to there, whilst at the same time having a look at some of the opportunities that exist more distantly.
Paul, just if you wouldn't mind, just explain when you say along that development path, just in layman's terms, what does that look like?
Well, normally when a company makes a discovery, there are certain hoops that you jump through in order to get to the point where you might go to a bank and say, look, we've got this mineralization. We think this is a mineable project, and here's all the documentation to verify that and to justify a debt and equity investment for actually putting that into production. So we are kind of at that early stage, but as I say, we have already done a number of studies that tell us that the opportunity to actually put this into development is real, and we need to push through all the myriad of studies that we need to perform in order to get to that point of going to mine it, essentially.
And again, all that myriad of studies, I guess I'm trying to help our audience understand why is it important to go through all that process?
Well, obviously, if you're going to go and get finance, there's a risk. Now, what you want to do for debt investors as well as equity investors is to reduce that risk. If you don't do the studies, and we've seen a number of companies and projects over the last 2 or 3 years that have got into production and they've failed.
Yeah, it's a very good point.
There's myriad reasons why that may have occurred. But what you don't really want to do is to only do studies that reduce the risk so much. If you're an investor, it's a dangerous time putting a project into production for any company, right? There are certain unknowns, but you want to do that work as thoroughly as you possibly can to reduce that risk, right? It's in nobody's best interest to take a shortcut.
Okay. Yeah, and that does make sense. And you brought up a very good point, is that some people have gone into production, haven't done the work, and then it's all fallen apart because they don't have everything that they need.
Or they just may have missed something, right, that wasn't obvious at the time. And I'm not sort of laying blame on anybody. These things do happen. Yeah. But, you want to do everything in your power to make sure that you've reduced the risk to an acceptable level for your investors.
Paul, you've been in this business a little while. What excites you about Ashburton as a project? Because there's lots of noise out there. There's lots of people doing lots of projects. I want you to tell us why this particular project excites you at the moment?
Look, I think overall, it's the biggest gold resource in the area. It could act as a central hub, if you like, if companies around us discover, a few 100,000 ounces, which on its own would be, it wouldn't form a standalone project, for instance, right? Now, we believe with 1 million ounces in Mount Olympus and, a relatively high proportion of that falling within an optimized pit shell, that we've actually got a standalone project or potential for a standalone project.
Okay.
So we can go forward on what we have now. Anything else that might be discovered in the area could potentially go to Ashburton if there was an opportunity to work with those companies that effectively have a stranded deposit in the region. So that's one aspect of it. But you don't necessarily need that, right? And don't forget that a lot of the oxide material that had been mined in these pits way back in, between 1998 and 2004 by SEPA, that's gone. We've got a sulfide dominated resource currently. All the mineralization is sitting there in the pit floor. There is a good opportunity to actually produce high-grade gold concentrates pretty, virtually straight away from some of these deposits.
Much infrastructure in the area?
Well, we've got the town of Paraburdoo 40 kilometres to the north of us. Obviously, it was a mining operation previously. The tenements there are still mining leases. They're valid until way into the 2030s. So, we know it's been mined before. We know that we can get water. We've got good relationships with our heritage groups, which is, obviously extremely important to maintain and to encourage going forward. So, they're all important aspects. That the fact that there's been operation here before, we know it can work.
All right. March, you start drilling, correct?
Our field season will start in March. Okay. We may well have some preparatory exploration that we might want to do prior to drilling, and it depends on how long it takes us now that we've received the new block model to identify the highest value target. So I'm not saying that we're going to be drilling in March. What I'm saying is that we most likely will be drilling this field season. That field season is not far away. Whether it's March or whether it's April or May, I can't tell you until we've actually put that plan together now that we've got this information. Okay,
so you're pretty excited about it. Now, I don't want you to go away because I saw the news out today about a spodumene discovery also over in WA at Marble Bar. Now, for those out there that are not sure about this, is the lithium side of Kalamazoo. So there's a big focus on gold, the Ashburton project, lots going on there, and Paul is very focused with that. But you've gone into, is it a joint venture with SQM and the lithium?
Yeah, so it was actually at Diggers and Dealers a couple of years ago, Kerry, that
when none of us could get there, Paul.
No, right, it must have been one of the years that we could get there. No, we've developed a really, really strong relationship with SQM, and as your viewers might know, SQM is a very, very large Chilean lithium producer, one of the biggest in the world. Yeah. And in fact, the lithium side of their business, which is huge, especially in terms of cash flow at the moment, as you can imagine, is only a portion of their business. So SQM are a very, very large group. We have developed a very good relationship with the guys at SQM. They've set up here in Perth, and we continue to work really well together. They are earning in equity. The deal we did with them is for $12 million over a period of 4 years. So, we're doing the exploration. We have a technical committee that we get together every month, and we talk about the programs and the budgets, and we agree on the way forward. They've got some really, really good technical guys in their group. And then we go and enact the program. So that's actually working really well, I think, for both parties.
Well, I'm sure they're very excited about this latest news. Then talk to us about what happened at Marble Bar.
Yeah, well, we put out an announcement this morning. Basically, it's a bit of a drilling update. We've late last year we did some drilling at Doms Hill and our Marble Bar projects. They're all in the same region there around Marble Bar. We got some pretty interesting results from that drilling, particularly at Marble Bar. But more importantly, I think as we've discovered more in the area, we've done some more reconnaissance, we've done some more mapping, and we've actually identified a vein swarm in a tenement to the west of where we've been working. And recent rock chips from that have come back at 2.8% lithium. Now, that's a great grade. Sorry.
Yeah, that's what I was just about to ask you. 2.8%. I know, but I don't know if even my viewers know. But is 2.8% good, bad, indifferent, average?
Look, I think most of the deposits that have been found in WA over recent years, there's been just over that sort of 1% mark. So to get something of that grade, albeit in rock chips at the moment. That's a good sign. And we're getting several rock chips between sort of 2.1 and 2.8% over a strike length of over a kilometre. So that's sort of given us quite a bit of focus and encouragement. That dike swarm has never been drilled. So that's going to be one of our focuses going forward on the lithium side this year. Obviously, that is a key focus for us this year in our lithium exploration.
Paul, lithium, it's been on the lips of everyone. There's lots of companies out there, Paul, they're all going, I've got lithium, I've got lithium, I've got lithium. Why do you think Kalamazoo's projects might be a little bit more of a standout from, I guess, all the noise out there?
You've got to do the work, Kerry. And, I think it's a good sign. We've actually properly identified the lithium. We've done that through spodumene. We've done that through XRD analysis. We absolutely know that it's spodumene. There's a bit of lepidolite there as well. Okay. It's virgin ground. It's never been drilled. It's likely that we're actually going to find more pegmatites. We've only had a very limited available time to actually go and do that mapping. Boots on the ground is going to tell us quite a little bit more. Yeah. But it's virgin territory, and WA never ceases to surprise me with what we can find after all these years.
Amazing.
It's incredible. So you can never write it off. And
it's a big state over there, Paul.
It is. You've got to be in it to win it. You've just got to keep plugging away.
So just, again, outline the next 6 months in this area for the spodumene discovery that you've spoken about.
Yeah, so again, field's really, really hot in Marble Bar, as you're aware. As the field season starts up there, it's going to be boots on ground. It's going to be doing more mapping. And then through that, we can actually look at developing quite a comprehensive drill program up there for this area. And I'm sure that SQM will be very happy to come along with us on that journey. I mean, that's why we're there. We're after finding a reasonable deposit. That is why they're in WA.
And the deal you've done with SQM means that you're not doing any out of pocket. You're managing the process. You're doing all the mapping, if you like, and the drilling. But the funding is coming from SQM. Is that
correct? Correct. So So
Wow.
all that work is not costing Kalamazoo shareholders cash, right?
I think
So,
that's really important.
well, look, I mean, when we started doing this, we, like a lot of companies that joined in the hunt for lithium, we thought, well, they have a technical team.
Hmm.
Like this is their business.
Yeah.
Um, and they've proven to be a really good partner, not only financially but also technically as well. So
Oh, but that's a marriage
I
made
think that kind of makes sense for us because we're a small company. Let's face it. If we can partner with a company like SQM, it's almost like a zero risk really for our shareholders.
Yeah.
And lithium is a risky business, just like exploration for all commodities. But I think the deal that we've done there is low risk for Kalamazoo shareholders. We get opportunity for the upside, and SQM after finding a world-class deposit. If at the end of the day we do find one, and SQM hold 75% of that project, would we be happy to hold 25%? Absolutely. Absolutely. So, I think from our shareholders' point of view, that was a good deal.
All right, we're running out of time, Paul. I'd like to just, if you like, wrap it up in a nice little bow and I guess summarize it all in 3 points why, as we sit here chatting today, you think it's a good time for people to sit up and take notice of Kalamazoo. Just 3, even though I know you've probably lots.
Okay, so obviously first, watershed moment for Kalamazoo, Ashburton. We have our own resource. It's very robust. The grade has gone up at Mount Olympus. Very, very important. Identified exploration opportunities as a result of the work that we've done. That is the potential to grow the resource, but we continue on our development path for that project. And we have confidence enough now to do that. Secondly, a fledgling but growing lithium focus. I think that's really important. We have a number of targets in lithium. We have a great partner in one of the world's largest lithium producers. I think they produce around 20% of the world's lithium.
Amazing.
Primarily from their player deposits in South America, of course. But of course, they've made big strides in Western Australia as well. And thirdly, we're really cheap.
Said with gusto. Why are you so cheap, Paul?
I just think the market hasn't fully appreciated our assets.
All right. Well, part of it is getting out and having a chat with our audience. And ladies and gentlemen, if you've got questions, pop them in the comments below. And when Paul comes back on, we'll ask him those questions. There we go, Paul. I put it out there. Let's make it interactive for next time. So I'll be watching all those comments, and we'll get you back again very soon in the near future once you've started that program up there in the heat. Let's hope it's not too hot. But look, congratulations. Firstly, when I first saw the Ashburton one, I went, that doesn't make sense. It clearly makes sense now. And as you say, I think you said it's one of the largest deposits in the area?
Yeah. Because, that kind of sits just underneath the Pilbara Craton. And, we can see Rio's operations from our camp. So, it's very close to infrastructure in that point. But in terms of gold, we've got Paulson's up the road, which is now in Black Cat. And, we're sitting there with 1.44 million ounces in resources with every opportunity to grow it. It is the biggest resource in the area. I mean, obviously, you've got De Grey and Calidus and the other guys as our neighbours, but, that's a couple of 200 to 300 kilometres away from where we are.
All right. Well, congratulations. And the lithium continues to keep on giving. And important to note that the partnership with SQM means that shareholders are not spending funds on lithium. They will be growing it, they'll be developing it, but in partnership with SQM. Paul, great to chat to you today. Nice to see you. And we'll talk after Easter.
Thanks, Kerry.